Hello, this is Manish Patel with Ichimoku Trade and AlertTrades.com. Today what we're going to do is we're going to show you how to use the IMTF indicator to optimize Fibonacci existing trading system. One of the comments we made during our product launch is that you could take this IMTF indicator, you could basically turn off the Ichimoku components in it, and you could apply it to any technical system out there. So this is the first of many different workshops where we're going to show you how you could take this indicator and apply it to any technical system out there, from moving averages, stochastics, Fibonacci, Elliott wave, and so forth. Okay, so let's begin. Normal thing we go through is our disclaimer to state this is for education use only. We're not soliciting you to buy or sell any particular instrument. If you do so, you're doing that at your own risk. All information is owned by EII Capital Group, cannot be copied or distributed without our written permission. We are broker neutral, so we support all the charting platforms out there. Today we're going to be discussing TradingView, since that's where the indicator is available. Okay, so let's get to the charts. So the example we're going to go for is Australian USD, and there's a couple of reasons why. You can see here from Australian USD here that basically this is in a nice bearish downtrend here going forward. So this is the daily time frame here, as you could see, and you could see that this instrument slowly been stepping down, going down, 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 down. And you could see at the beginning of January, beginning of this year in 2017, that this was in a natural bearish trend here. So everyone based on technical analysis was also looking for this to continue to go bearish. They're looking for a pullback and then to go down. Unfortunately, that pullback didn't occur, and that pullback actually turned into a full-blown trend reversal. So this caught a lot of people off guard, and we're going to show you how you would never enter that trade at all, and actually you would be looking for a bullish scenario, believe it or not, on lower time frames to go long once these Fibonacci levels got broken. Okay. The other thing a lot of people are going bearish is that if you look at the seasonal pattern for Australian USD for January, it was 73% probability of being bearish. This is provided by AlertTrades.com for free. Okay, and you can see the last 3 years it was bearish too. So a lot of people based on seasonality and or technical charts were basically going bearish into 2017. Now let's go through and review this indicator real fast. Remember, the red zone here is basically telling you it's bearish. That's where a bearish setup exists. If it's a green zone here, that tells you that's where a bullish setup exists. Okay, you could use these setup zones if you want, or you could ignore them and just stick to Fibonacci whenever the Fibonacci levels appear and go from there. Let's look at this bearish zone here and look at this real fast. If you look here, this basically retraces from here to here. Okay, and what you're looking at, let me clear this out, this is the Fibonacci level. So I'm going to mark off the 50% and 61.8. Okay, and then I'm going to delete the retracements here so you get a clearer picture of everything that's going on. So let me just delete that. Okay, so now we have the levels here. Notice it never got to the 50% or 61.8. What you're looking for is when it gets these levels here, you're looking for dots or crosses to appear. If they appear at those levels there, then that basically means you could take that Fibonacci level and short this particular instrument off either the 50% or 61.8. So the way I look at it step by step as a simple trading 1, 2, 3 plan is that if it gets the Fibonacci, I have a dot across, I could short it at that point for this particular example. If I don't get a dot across, then I wait for it to get to 61.8. If I get a dot across at that point, then I could short it at that point. If I don't get anything there, that means basically I can't short this based on Fibonacci levels at all. In this example here, it never got there, so there was nothing here to discuss at all. Okay, so let's move on from that one and look at the big one, which is pretty much going into 2017, where everyone was looking for a pullback to go short. And this is basically the level right here from here to here. So let's draw this guy up and draw him here, and let's go through and mark off these levels here. Okay, so there's one level there, that was that level, and then there's one level here, which is right there. Okay, so now I'm going to remove that, and I'm going to look at this and zoom in on these levels here. So When we first got to the 50% retracement here, there was no dots or crosses. Notice it kind of hung around here, so a lot of people thinking, especially on the second bar, maybe it goes short. On the beginning of the third bar here at this level, oh, it's holding this level, it's going to go short. So basically a lot of people here at 50% started going short here because it kind of sat there for 3 days here at this point. So you could see here there's no dots or crosses here. So if you're using the IMTF with Fibonacci, you're not going to sit there and pull the trigger and short this particular instrument at that pullback level at all. Now what you're going to do is wait till it gets to 61.8. When it got to 61.8, all this hadn't occurred yet, but all this had gotten here intraday. When it got there intraday, we did get a dot, but it wasn't at this level or above, it was below us. That level right there tells us it was a support. That's not good at all. We want it to be at this Fibonacci level or above it. Okay, in this case it was below it. So, and what that dot means is that the day traders and swing traders was thinking there's a support there now instead of a resistance, which is not good at all. Since you're looking at a daily time frame, you're a long-term trader. Okay, doesn't matter if you're trading a daily 1 minute, 2 minutes, 5 minutes, or anything. You could apply the same concept to whatever time frame. But in any case, you're looking for a dot across at this level here above, since you're looking for a bearish trade. You didn't get that at all, so you cannot take this trade at all. What you need to do is, as soon as you got there, you have a dot below you, so you can't trade it at all. If price had gotten below the dot and closed below the dot, then you could sit there and start taking the trade to go short. But this never happened at all. And in fact, if you looked, that support right here, where the day traders and swing traders had to establish support here, it took off. It went all the way up. Okay. Now, a lot of people thinking, okay, this thing's going to go up. And then at that point, if you use Fibonacci extensions, a lot of people are thinking, okay, it's going to retrace to the 100%, which is this level right there. Okay, so I'm going to mark off the 100%, and then some other Fibonacci traders are going to say, okay, if it breaks the 100%, it's going to get to the 127. So those are the two key levels right there. Actually, if you look at this here, actually that's okay. So if you look here, from this point right there to right there, the 100% retracement will be right there. Notice it got there. There was no dots or crosses there to hold us in check to sit there and short this. So it left there and got to the 128%. Now a lot of people think at the 128%, that's the key level here. Because if it's going to do a fake upward movement and break out and make everyone think it's going bullish, and then reverse, it's going to do it here. Notice here it stopped exactly at the 127% retracement, but there was no dot or cross here. And then after a while, there's no dot or crosses here. Came back to the 100% retracement here. Didn't sit there. Sorry, 100% extension. Didn't sit there and break it at all. Came back above here, and then if you look, there's a cross below this green bar right there. Okay, that basically was telling you that the swing traders and long term have a support, and then on this bar right there you have a purple dot, which means the day traders and swing traders are thinking support. So now by the time this came around, basically the day traders, swing traders, and long term were basically looking at going long here. So there was no little level here at all. Some traders, Fibonacci traders, look to short when you get to 127% extension, and you could see there's no dots or crosses at all in order for you to take that short. So this is another good way where you could use this to sit there and find tops and bottoms at Fibonacci extension levels. Apply the indicator, see if these Fibonacci extension levels you get a dot across. If you do, that confirms that Fibonacci level to a point you could take that trade. Okay. Now, if you guys have any questions, you guys can email us at info@eicapital.com. It's supposed to be a dot right there. Also, if you're interested in learning more about this indicator, or if you want to purchase this indicator, believe it or not, we got a special promotion price right now of just $99 a year. We gutted this so everyone now could start using this. It's a special promotion price. It's very limited. It's pretty much less than 41 cents a day. This is an annual subscription here. Okay, once you get it, you're locked in, you're grandfathered in at that price no matter what we do in increasing the prices. If you want to purchase that indicator, you could go to ichimokutrade.com/indicator and purchase it directly from the order form there. If you don't know anything about TradingView, the online trading platform there, you could pretty much go to ichimokutrade.com/tradingview. It'll take you there and it'll allow you to evaluate the platform and so forth at that point. Okay, have a good day.